Hello, everyone. Welcome to 2023's first commodity podcast with me, your host and guide, Ravindra Rao from Kotak Securities Commodity Research Desk. I would like to take this opportunity to wish you all a happy, healthy, and prosperous New Year 2023. Although the format of this podcast is weekly, today we will deep dive into commodity performance for the year 2022, followed by important factors to watch out for in 2023. Commodities had a bumpy ride in 2022 as most of the commodities tested all-time highs in Q1 2022, followed led by Russia and Ukraine conflict. However, the gains did not sustain, and most of the commodities fell to multi-month lows as, in fact, multi-year lows as broad US dollar index strengthened, crushing commodities. The best performers in commodity space were the energy pack with the NYMEX Natural gas ending the year with a gain of around 20%, followed by crude oil that managed to hold on to gains of 6.71%. Amongst the precious metals, COMEX Silver outperformed gold with a gain of a mild gain of 2.71%, whereas gold ended flattish. In the industrial metal space, copper, zinc, and aluminum ended lower, ranging from 13% to 15%. In the domestic market, the scenario was different. On the MCX, the yearly gains were much higher as Rupee fell more than 11% against the dollar. Natural gas was the best performer, gaining more than 36%. Gold outperformed silver, gaining by around 15%, with silver up by around 11%. Industrial metals on the MCX ended lower, but the range was just 4 to 7%. US dollar was the driving factor in 2022 that ended the year under the review with a gain of around 8% plus. US dollar got support as Fed started front loading rate hikes, delivering 425 basis point rate hikes in last seven FOMC meetings and hiking by a 3/4% four times in a row since April 2022. Russia's war in Ukraine led to a short-term spike in commodity prices, but since the end of Q1, US yields and the dollar skyrocketed, weighing on commodity prices denominated in US dollar. The dollar was the only play in town until 2022. However, prospects of a Fed pivot to slower pace of rate hike changed the entire game plan. The greenback has fallen around 10% from the September peak as Fed indicated slower pace of rate hikes from December. Amid the backdrop of easing US inflation and looming global recession, investors are expecting Fed to take a pause in the rate hikes in 2023 after a 225 basis point cut in hike in Q1. Uh, the dollar index has already peaked or might have peaked in quarter one 2023. On the price front, US dollar index has closed the year 2022 below the highs of 2016-2017 near 103.80. The bulls would have got an edge if the price would have closed above 104. However, a lower close has once again put dollar into consolidation phase between 104 to 88 that started in 2017. On the weekly front, price has closed below the 52-day moving average support of 104.18, indicating further weakness. Resistance now would be at 105.75. A weekly close above 105.75 would again provide strength to the dollar. If the fall continues, the next possible downside would be near 101.35. Coming to commodity specific, on the precious metal front, Russia-Ukraine war pushed gold prices to near all-time highs in Q1, while the dollar strength has taken the commodity to a two-year low in Q3. After touching a high of $2,078 per ounce post-war, COMEX gold fell to a two-year low of $1618.3 per ounce as the Federal Reserve took the Fed funds rate to the highest since 2008. Gold's movement in the last few months showed that it has behaved more as a commodity rather than a safe haven asset. The yellow metal couldn't hold on to the gains from the geopolitical tensions as Fed started front loading rate hikes. Gold, which is said to perform well during high inflation era, disappointed investors as hawkish Fed reduced gold's shine. Since March, US Federal Reserve has been aggressively raising interest rates to cool down the hottest inflation in decades. Higher yields and positive real rates in the US kept investment demand in check during 2022. Gold investors were cautious amid persistent strength in the US dollar and the monetary tightening outlook for major central banks. However, prospects of Fed pivot to slower pace has pressurized greenback from September peak as Fed indicated a slower pace of rate hike from December. The dollar index typically peaks out well before Fed funds, and thus recent Fed tilt has prompted a profit booking in the greenback and US Treasury yields, bolstering a year-end rally in bullion commodities. Amid the backdrop of easing US inflation and a looming global recession, investors are expecting Fed to take a pause in rate hikes somewhere in 2023. Out of seven US recession since 1973, gold performed well during three 1973-75, 1979-80, and 2020. Its performance was somewhat less distinguished during the two 1981-82 and 1990-91. World Gold Council research has shown that the yellow metal has been a top performer among asset classes during period of stagflation. A period of stagflation is a reasonable scenario for quarter one, in the first half 2023, though regional differences exist. ETF inflows might start gaining momentum as Fed is likely approaching the final leg of rate hikes in the current cycle. Jewelry demand should also be steady amid China's reopening. Following the sharp increase in central bank demand for gold in quarter 3 2022, the outlook for official sector demand for gold may also be resilient in 2023. On the price front, gold in the international market is expected to trade in the range of $1670 to 2000 an ounce with a positive bias in 2023. This is the entire year range. On the MCX, gold may trade in a range of rupees 48,500 to rupees 60,000 per 10 grams. In case of silver, the global silver market is forecasted to record a second consecutive deficit this year. At 194 million ounces, this will be a multi-decade high and four times the level seen in 2021, sources Metal Focus. Going forward, China's reopening, Fed stance, and global growth are going to be the key drivers of the silver prices. The US economy may enter a mild recession. However, prospects of a Fed pivot and amid the backdrop of easing inflation in the US might offer a helping hand. China is expected to bring an end to its strict zero COVID policy by Q1 2023, which might fuel the slowing economy in the coming quarters. Demand outlook for silver remains solid amid the global green energy push, boosting the industrial demand. For entire 2023, silver might trade in a range of $19 per ounce to $30 per ounce with an upside bias. Silver on the MCX may trade in the range of 55,000 to 84,000 per kg. Coming to energies, crude oil managed to hold on to the gains in 2022. Wild price swings were witnessed in 2022 as Russia-Ukraine conflict led to both demand and supply side repercussions. The year 2022 was expected to be a year when global market was expected to be well balanced as demand growth was expected to normalize while supply was expected to pick up pace. This market assumption or these expectations were, however, shattered by Russia's attack on Ukraine. Crude oil was one of the best performing commodities in early March as NYMEX and Brent crude both went up to hit a 14-year high of near $130 per barrel and $135 per barrel respectively. This was mainly due to supply side imbalances which outweighed demand concerns on fears that Russian supply may be impacted with no easily available replacements. However, oil prices could not sustain at higher levels and slipped to near 93 per barrel by early April on easing tightness fears as Russia-Ukraine talks continued, whereas US and other IEA members announced a release of emergency stocks. Crude oil prices have largely remained under pressure since May, weighed down by aggressive monetary policy tightening and fragile global economic outlook. Oil prices got a much needed respite in October as OPEC decided to cut oil output by 2 million barrels of oil per day, equal to 2% of global supply. Crude oil prices are currently 38% off highs touched in March as major headwinds persist in the form of uncertain global economic situation and a fear of a looming recession. This has pushed EIA, IEA, and OPEC all to revise oil demand growth expectations lower for 2023. Crude oil prices are expected to remain volatile in 2023 as EU will have to find replacement for Russian crude while economic activity remains subdued. Bets that the inflation may have peaked might prompt major central banks to soften their monetary policy stance. However, there are demand and supply concerns, both of which are unlikely to dissipate soon, which may lead to more price swings. We, however, do not expect a sustained decline unless supply risks improve or there are signs of a significant slowdown in demand. For the entire year 2023, we expect WTI crude oil to trade in a range of $60 to $100 per barrel, whereas MCX is expected to trade in a range of 4,700 to 8,300 with a sideways to positive bias. Finally, in case of industrial metals, I'll be covering only copper due to shortage of time. Copper prices reversed trend in 2022 following 25% gains for last two consecutive years. Copper, which is widely known as an economic barometer, has been weighed down by repeated COVID-19 flare-ups in China and global growth concerns. Prices have seen wild swings amid escalation of tensions between Russia and Ukraine since late February. Initial reaction was euphoric as metals, energy, and raw material prices all soared to multi-year high or record high levels in March on fears of further supply tightness. Since Russia accounts for 4% of global refined copper output, copper too rallied to a record high of $10,845 per ton on the LME and 886 per kg on MCX in March 2022. However, a resurgence of COVID in late March renewed demand-side concerns that far outweighed supply-side discrepancies, leading to a sharp pullback in prices in quarter two. Third quarter was no different, either as fears of recession, unfavorable growth, inflation dynamics, and fragile economic recovery in China amid a worsening COVID-19 situation pushed LME copper prices to 19-month low at $6,955 per ton by mid-July. For 2023, copper fundamentals are positive as increasing copper premiums highlighted solid copper demand. Further optimism due to China reopening may be supportive for global risk appetite and in turn copper demand. Gains in copper may be largely dependent on COVID policy updates from China as markets focus shift from more to demand amid lingering fears of recession. Hence, any extended slowdown in growth in 2023 will limit upside in copper. LME copper is expected to trade in a range of $6,700 to $9,700 for 2023, whereas MCX copper expected to trade in a range of 580 to 810 with a sideways bias. With that, we come to an end to this podcast where we have reviewed year 2022 and provided with 2023 outlook for major commodities. Now, due to shortage of time, I couldn't cover other commodities. Global uncertainty will continue in 2023 with COVID still not gone and Russia-Ukraine conflict remains. So the advice would be to trade with caution and with proper money management rules. Once again, wishing a fantastic 2023. All the best and trade safe.